Welcome to How to Buy Your First Home class. What's going on, everyone? My name is Mirshad Afshar. I am a real estate agent and a real estate investor in the greater Austin, Texas area. And we have put this course together for you to help you own your first home and stop renting. We understand that this is not an easy task, rather a huge accomplishment in your life. Hence, I have decided to partner up with two other individuals to help you achieve this goal. Our first instructor is a financial advisor, Mason Morozes, who's going to teach you the fundamentals of how to save money for your down payment. Our second instructor is a mortgage lender, Logan Samsel. He's going to teach you exactly how to get your first loan. And third instructor is going to be myself, who's going to teach you exactly how to identify and locate the best property for you and your family to make sure that you invest in the right property. Without further ado, let's have the first instructor and get right into it.
How's it going, everybody? My name is Mason Morozes. I'm a financial advisor with Synergy. I'm also a real estate investor here in Austin, Texas. So a few short years ago, I personally am a great saver, and I was faced with this decision of how do I save for my first time home? How do I save in the right type of account for what I'm trying to accomplish with the goals that I have? And with that, I was kind of faced with my company's 401k or Roth IRAs or things that have always been pounded in my head as a financial advisor, future focused, where while those accounts are great, sometimes they might not accomplish our goals of wanting to buy a home, or in my case, wanting to buy an investment property first. Now, the reasons for the differences of these accounts, and while they're all great, they all accomplish certain things that may not be in line with obviously your goal of buying a home. While there's some exceptions to the rule, generally when you see an account with an IRS code in it, such as 401k, 403b, Roth IRA, traditional IRA, what those mean is those are sections in the IRS handbook that essentially mean that you can't touch those funds until age 59 and a half years old. If you're buying your first time home like I was a few years ago, thinking of those certain accounts, they really didn't accomplish the goal I had of wanting to buy a home in 12 months or 24 months or within the first few years of my early career. I had to look at alternatives to also fund those or stop funding those to look at other accounts that would accomplish my goals and your goals of buying that first time home. A few very basic examples of types of accounts that would and would not accomplish those goals of saving for your first home would simply be a high yield savings account or an HYSA. All that means is it's a savings account that's providing you a little bit more interest than a normal savings account that maybe we started with Chase or Bank of America. Those large banks, one of the things that they do is sometimes not pay you anything on your savings, where you could go out and open up a high yield savings account separate from your normal things and name it your down payment fund that's paying you a little bit more interest per month, but is still readily available for when that time is correct to buy your first home. So some examples of those would be just checking bankrate.com for the highest paying high yield savings accounts. Look for some with no fees. There's no point in paying fees when you don't have to. And some of the mentality, while this is very basic and should be easy to understand, a lot of the mentality of how can I do this? How can I accomplish the goal of buying my first home will all tie into it, because it's easier to separate a savings account that is for this goal compared to something that you see every day. So I would recommend opening up something new to where I can systematically say, I'm going to shift $500 a month to build my home fund up. I'm gonna shift $2,000 a month for those that are high achievers, are really motivated and able to do it, into the right type of account here on the right side. High yield savings accounts or liquid funds where in comparison, a lot of times, even if you are a great saver, look at what your company's 401k match is. If you're overfunding your 401k and say your company's matching 3%, but you're saving 10, I by no means am saying that's a bad thing. I'm just saying that that's going to accomplish a goal for 60, whereas in the next 2 years, you could shift that arbitrage or that 7% to your down payment fund so that you can quickly accomplish your goal of buying your first home. Next, I want to touch on a concept that reigns true with me. Sometimes maybe you're not a good saver. Maybe you can't even fathom saving 10, 20, 30% of your income, and it's hard to scrape by each month. I do understand that. One of the things that I've found to accomplish or to help better fund your high yield savings account or your liquid down payment fund would, rather than penny pinch and try to save an extra $200 a month, $50 a month, whatever it is, I actually realized this myself when trying to figure out how I'm gonna best amplify or get this account up to the desired number for my down payment. And I realized that, maybe if I just worked on a Saturday or a Sunday, or I watched someone's dog over the weekend, anything, there are millions of side hustles out there where, in my opinion, earning an extra $10,000, earning an extra $20,000 for your down payment is way easier than saving what you're already making from your paycheck each month. If you could figure out a way to generate an extra couple hundred a week or an extra 1,000 a month that goes into this account from earning it on top of what you're already doing, I believe that's a lot easier than just saving an extra 5, 10, 15%, especially in today's interest rate environment and the inflation that we've seen where things are more expensive. So very basic, but number 2 is look for a side hustle. Become an Uber driver, become a DoorDash driver, watch dogs on the weekend, sell feet pics, whatever side hustle you can come up with. I would tie that back into your savings account here, or just saving more if possible. And next, I just want to touch on the other side of the equation and just creating some better money habits leading up to buying that first home. Because I also want to remember your home, whether it's your primary home or anything, if you're buying it in the United States of America, on average, it should appreciate by 3% per year and be in an investment in and of itself. So on that, if we can create some better money habits leading up to what is likely your largest purchase that you'll ever make in your lifetime, there's some critical things that you can look at too before, setting up these accounts or before figuring out a side hustle. I would go back in time and maybe download last couple months of credit card statements. Is there something that's really draining your account that maybe is adding up more than you can even realize it? One small example I see of this all the time where someone eats out way too much, or what's worse and something that hurts my money head is when someone door dashes their food when they could just drive 5 minutes and go get it. Things like these that to create better money habits, it's really just prioritizing what your goals are. For me, I wanted that first home. I wanted to get my realtor to give me those keys to close at the closing table more than I wanted that burrito on a Friday night. It's little sacrifices and habits that you make today to really game plan and map out how you can get your accounts that are ready for that down payment, ready to shift into a hard asset as in real estate, whether it be for your family, for memories, for an investment property, anything. Take a good hard look at where your money is now. Where is it going? Can we fix it? Can we clean it up? Can we sacrifice certain things that are draining it all to really get us to get those keys at the closing table? With that being said, with any additional help you may need on that first step to opening your account, to gaining that goal of your first home, feel free to reach out to me. I'm happy to help no matter where you're at in your journey of getting the key at that closing table.
Hey guys, Logan Samsel. I'm a loan officer with the Samsel Group over at VIP Mortgage. Thanks so much for joining in our class, and I can't wait to share all this great info with you. A little bit about me before we get started. I grew up around the mortgage business my whole life, learned about interest rates and loan programs around the kitchen table as a kid, and I can't wait to share some of that kitchen table knowledge with you guys today. As we get into our first section, myths about mortgages, I just want to preface with the fact that there is so much information out there that is not entirely true. Let's get into the first piece. The biggest myth about buying your first house is that you need 20% down in order to qualify. That couldn't be further from the truth. Oftentimes with VA and USDA loan programs, you can go down as little as 0%, but more commonly, if you're doing an FHA program, you can get 3.5% down, or a conventional program as a first-time home buyer is 3% down. One of the second biggest myths about getting your first home is that an FHA loan program is always the best option for you. That's not always the case. It's important to talk to your loan officer first in order to determine what might be the best scenario for you given your financial circumstance. Lastly, the other myth in mortgage that's very common is that you have to come up with your full down payment and closing cost amount all by yourself. That's simply not true, and we're gonna go into that right now. There's a couple different ways that you can access funds without using your own money for down payment and closing costs. The first is gonna be seller's concessions. Seller's concessions vary depending on your loan type, but overall, what they can do is help cover closing costs for your loan program. The second way you can get some help covering closing costs and down payment is through a gift. A gift can come from a multitude of different people. It can come from a family member, a domestic partner, your employer, or your church. All depends on where it comes from and how we can use it to help you. The last option is down payment assistance. If you don't have any way to come up with the full down payment amount and the seller's not willing to help with some of your closing costs, a down payment assistance program might be for you. There are a couple different programs that we offer both internally at VIP Mortgage, as well as down payment assistance programs that are used by the state of Texas. Give me a call and I'd love to run through them with you and see if either one is a good option. Now that we've dispelled some common mortgage myths and talked about down payment and down payment assistance programs, what we're gonna get into is qualifying you for your loan. The first thing we're gonna talk about is credit. The two biggest things affecting your credit score today are your payment history and your total debts. Those two things make up 65% of your total credit impact. And it's very important to make sure you're paying those obligations on time, whether it's setting up auto pay, setting reminders on your phone, anything like that. And another good piece is you typically don't want to go over 30% of your credit line on revolving accounts such as credit cards. So the big thing that we always say is you want your credit limits to be very high, but you want to keep those credit balances relatively low. A couple really easy credit tips as well include not closing old accounts, as that has an impact on your total credit history. Credit history makes up about 15% of your total credit score, so it's good to, even though you don't use a certain credit line anymore, such as a credit card that you have had for 10 years, oftentimes it's worth to keep it on rather than canceling it out and sending it into the bank, because once that credit line is no longer active, it doesn't carry that full weight anymore. Now, I'm gonna talk to you about some qualifying numbers, what we look at on the credit side when you apply for a mortgage. If you're not there yet, that's totally okay. Give us a call. We work with people day in and day out on improving their credit and making sure that they're set up for the future so they can buy that first home soon. FHA programs are typically gonna be the most lenient ones that you come across. We can go down to about a 580 credit score with a 3.5% down payment and up down to a 550 with a 10% down payment. Whenever we look at a conventional loan, we typically want to see a minimum of a 620 credit score. While not as common, both VA and USDA programs also are very forgiving on credit. Their credit requirement for both of those programs goes down to 580 on your minimum credit score. Now that we've talked about credit and down payment, it's important to talk about the mortgage itself. The mortgage payment that you pay each and every month is broken up into 4 pieces: principal, interest, taxes, and insurance. The principal amount is the total amount of money that you borrowed in order to secure your home. The interest amount is often referred to as the cost of borrowing. It's important to note that regardless of what the interest rate is, if you can afford it in your monthly budget, it oftentimes makes sense to buy that first home rather than rent. Taxes are the total tax amount that you pay each and every year to the government to own your property. Taxes are oftentimes paid in a one lump sum amount, so we break that up into 12 palatable pieces for you that you pay each and every month, and we'll go ahead and pay that debt when it comes due. Similar to insurance. Insurance both mortgage and homeowners insurance is due once a year. Because of this, we don't want to make you overextend yourself on one given month. So rather, what we do is we break that up into 12 payments, and then we'll pay either your insurance company or the tax agency in order for you to fulfill those obligations. Now that we understand what a mortgage payment entails, what credit you need to get a mortgage, as well as how you can come up with a down payment amount, now for the fun part. We get to get you pre-approved. Once you get pre-approved, you're gonna have a very accurate representation of how much home you're able to afford. That way, you can take this pre-approval letter to your realtor, and as they begin to do their home search for you, they'll have a very accurate picture of what we can do in the current market. The pre-approval is very quick and easy. It only takes about 10 minutes online. But what we're gonna ask for is your financial information. We just wanna know how much money you make, how much money you have in your accounts, how much money you owe, and your credit. Essentially, what we're trying to do is get a big picture view of your financial situation. That way, we can run our automated underwriting system early and often and ensure that you can afford the home that you're purchasing. Thanks so much for taking the time with me to go through these 3 very important things. I can't wait to see you guys get into that very first home. If you have any other questions about the mortgage process as a whole or are ready to start the process, go ahead and give me a call. I look forward to hearing from you. From here, I'm gonna give you to Murshad. He's gonna talk about how we can go about shopping for that first home and what you can do to make yourself a better home buyer.
All right, now let's talk about the fun part of this course, the house itself. Before that, I want to thank my partners for actually laying down the foundation of what is truly required for you guys in order to become a homeowner. Now, I'm going to go through 3 major aspects of buying a home that not an average realtor will tell you, and this is with an intention to help you buy the right home that could change your family lineage forever. So the first subject that I want to touch on is your mindset. Remember, this is the first home that you're buying. The idea is to get you out of renting 100% interest and actually get you into something very practical that you can start owning and building equity long term. So many times, the first time home buyers get really excited about this first home and they want to have all the bells and whistles that you would want to have actually in your dream home. But the truth is, this is only your first home. You have the opportunity to buy many, many more homes because your life situation changes. You're gonna have kids, you're gonna have more kids, and you never know where you're going to be in 10 years. So think about it. The idea is to get out of renting as soon as possible and start owning something. The second subject that I want to talk about is appreciation. And I know this is the biggest motivator that anybody wants when they're thinking about buying a home. Yeah, we all have heard those crazy stories that people sold their first ever home and made like $100,000. And I know you want that. So the aspects that I'm going to talk about are actually going to increase your odds of getting more appreciation. This is not guaranteed, it's just the odds, so that you make sure you put your money into right place. We all have heard this very famous phrase, location, location, location. That is the absolute truth about any property that you're thinking about buying. Now, there are so many different little things that go into the location that I'm going to talk about the 3 major ones. Number 1 is schools. You want to make sure that you buy your home in a school district that is highly rated and you can also afford, because think about it, people do care about their kids' education and they are willing to pay good money in order to have their kids in good schools. So mostly, historically, the money has flown into the good school districts. The next one that you want to absolutely check on is the crime rates. People do not want to invest their money in somewhere that is not safe. Think about it. This is your home. This is where you want to feel very safe, and checking that aspect is definitely one of the big factors. And the next one that not everybody talks about is the future of that area. And one major good factor that you can take a look at are the roads or the new developments. Every time that a city or a developer decides to invest large sums of money into a road or a new development, they've done their homework. You don't need to go and do your own homework. They've already have big teams that go after these population studies and where the money and the population is going to be moving, so you can just piggyback off of them and invest in those areas. Now let's talk about the house itself. Even though these two do play a very big factor, but the house itself also is a very, very huge factor, especially when you want to sell your home down the road. And I want to encourage you guys to focus on the things that you can absolutely control. So many times, first-time home buyers get very frustrated with the factors that they cannot control. Let's say, for example, their buying power. They focus on the fact that, oh my God, if I could own this much home, I will be so much happier, I will be so much in a better space. Now, as of right now, if that's something that you cannot control, why focus on it? Let's focus on getting the best home with your budget possible. So remember that aspect 100%. Let's talk about the house itself. One of the very, very first things in selling a home when it comes to that time is curb appeal. The first impression is always the most important part. You don't get a second chance. When someone walks into your home and they see the beautiful home with nice stone or nice brick and the grass is nicely clean and cut, that's always a very, very good thing to walk into, and it just sets the whole tone for their time in the home in a good you essentially start in a good step. The other factor that I want to talk about are some visual factors. Homes with higher ceilings always sell for more. Homes that have thicker baseboards do stand out as opposed to the ones with like 3-inch baseboards and it just looks very, very simple. Another factor that you want to make sure that you focus on is continuity throughout the home. Anytime that you see a home has like 3, 4, 5 different types of floors, like one room is carpet, the other one is tile, the other one is hardwood, that's always a bad thing, because whenever you want to sell that home, you're gonna have to pay the price for it. Most home buyers do not like that and don't pay for that. So make sure that you eliminate that factor. The other big factor is your neighbors. You want to make sure that you don't have too many neighbors looking at your backyard. Your privacy is very, very important. Even if you personally do not care about that, most people do, because they want to have privacy in their home. So make sure you're not buying a home that is adjacent to a commercial property, or it backs into like 5 different homes because of the orientation. The less neighbors you have, it's always better. So keep that in mind. Now, the last but not least is the shape and the maintenance on the home. A lot of times people do not really take good care of their homes, and if what you see outside is most likely true for the inside of the home as well. So if they haven't taken care of their lawn, they haven't taken care of their windows and so many different things, most likely they've been sloppy with the home throughout the time of ownership. And you might not see it at the 10 minutes or 15 minutes first time walking the home, but if you see some red flags, just be considerate, because that could carry on to so many different things that you can't see unless you move into the home. So always take those red flags seriously. Get an inspection on your home to make sure that you're buying a home that has been very well maintained. All right, I hope you guys got some value out of it. There are a lot of other factors that goes into buying a home, but we don't want to overwhelm you with a ton of information. These are some basic stuff that you should be following, keeping in mind while you're shopping for your first home. Again, my name is Mirshad Afshar with eXp Realty. If you have any questions about the home buying process, feel free to reach out to me or one of my business partners that helped me put this course together, and we really appreciate your business.
That wraps up our course today. Thank you so much for taking the time to watch this video. Give us a call if you have any questions about any information that you heard today. Between Mason's financial advice, my mortgage knowledge, or Mershad's tips on finding your home. We look forward to working with you in the future, and we're on your side. Thanks again.